two major events, the Reserve Bank of India's monetary policy outcome and the result of Gujarat and Himachal Pradesh state elections are lined up for this week. The RBI began its 3-day monetary policy meet yesterday and is due to announce its decision on Wednesday. The assembly poll outcome for the two states will be declared on Thursday. Analysts believe the monetary policy outcome will assume greater significance for the markets as the action will have long-term impact. This is because the action will cast a spell on the future trajectory of interest rates, forex reserves, and the rupee's value. Meanwhile, the impact of the assembly poll outcome, analysts say, will be factored in a day or two. But what are the markets pricing in right now?
The market's expectations of a lower rate hike from the RBI rests on two factors. First, inflation seems to be coming down and the future numbers could be smaller. Inflation has eased from 7.41% level to the 6.77% level. This has brought in some amount of optimism on the future trajectory of inflation. Therefore, RBI could go in for a lower rate hike. Second, the Fed also sounds less hawkish, with likely moderation in the quantum of rate hikes in the coming FOMC meetings. Inflation seems to have peaked. But one needs to be aware of the potential for some inflation persistence due to the volatility in oil prices. We need to carefully assess the impact of the sanctions that are about to set in and the effect of the capping of Russian oil prices. With a stronger than expected winter and the holiday season setting in, the dynamics could be more challenging. But the scope for excessive tightening to fight inflation may be over for the time being. State election results are not so much relevant today except for some hints about the continuity of the governments and the policies. There is no need to attribute too much of importance to these elections.
As suggested by Thomas of MK Wealth, oil markets remain dynamic, especially after price cap on Russian oil. Besides, there is always a slight possibility of actual election outcome being different from exit polls. So, how will a different outcome sway equities?
If this 25 to 35 bips rate hike does not get materialized and RBI stays put, then you might have a positive reaction from the market in the short term, but this could lead to pressure on Indian currency, which will be negative for the markets in the medium term. If the rate hike is more than 35 bips, then you probably could have a negative impact on the markets in the short term, but the markets will stabilize itself in the medium term. With respect to the Gujarat state elections, any reaction in the market, according to us, will be short-lived.
Today's market action will be guided by stock-specific news flow, foreign fund activity, and other global cues. Exit polls released after market hours yesterday will also dictate the market mood today. While analysts attach less weightage to assembly poll outcome, trends from exit polls and the actual election outcome on Thursday will be seen as a precursor to the general elections, which are less than 2 years away.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.